Overall trades at the counter for KCB was roughly nearly shy of $200 million last year, with the second most active counter at the stock exchange or securities exchange, just immediately after Safaricom. So just for our shareholders, especially the new shareholders, just to see in terms of our presence of our business, that hasn't changed. The context has remained the same. We are still within the East Africa region. We set up a rep office in Ethiopia a couple of years back. But I think we are not going this year, next year, in this horizon, we are remaining steady in the environment that we operate. And remember, today we are top 20 banks in the continent. In fact, last year was extremely impressive for us. We climbed 6 steps, 6 points. If you look at the cluster of the top banks on the continent, which is top 25, 2016 we were number 24. Last year we were number 18. So we kind of displaced some guys on the continent, which is something very positive for value-wise created as a business. But it means you're on track to become top 10, which is our vision in the medium term to be. And if you look at the profile of banks in the continent, you talk about many banks in Nigeria and many banks in South Africa. So artificial intelligence, which we are doing now on mobile lending, but then trying to use that on all other facilities in the bank. Our engagement with our customers, especially the pre-scoring for our clients with the Safaricom, has delivered some value. So we're looking at non-funded income contribution of 40% in the short term. So our target for 2019 and 20, today we're in the early 30%, so 32, 33%, and you see the numbers. And obviously, delivering a very strong shareholder value through ROE of 21%.
Managed to get our assets to just under 650 billion. That's about $6.5 billion. So, getting to that size of being number 721 in the world, this is some of the matrices that the banker looks at. The key driver for that growth was loans and advances. We are a bank, so you expect that the growth will be coming out of the asset book on loans. That grew by 10% to 423 billion. You can see the bulk of the growth comes out of the Kenya. The Kenya economy is the largest one in the markets we operate in. You can see the in terms of the asset size, it's roughly about 86% at 556 billion. So a fairly, I think, robust performance from an asset side of view. And maybe just to mention on the loans and advances, you saw the private sector growth. Private sector credit growth chart that the CEO presented, 2.4% growth in December. We managed in Kenya to do 10%. So the sort of the model KCB took in terms of to try and mitigate the impacts of the interest capping law was to try and grow market share, because our business model does allow us to do that. We have a big corporate bank, we have a big retail sector, which is is not as risky as you find in other banks. So we went out and continued lending. We did invest in government securities. As you can see, that grew by 4%, but we continued also lending to our customers. Looking at the P&L, so I'll start at the bottom. At profit before tax level, 2017, we've delivered 29.1 billion, which is flat to the numbers we had in 2016. Bearing in mind that this was the first full year of the interest capping law in Kenya. Also, we had the numbers that the CEO has talked about. We spent about 2 billion shillings on restructuring, which was not in the 2016 numbers. So starting from the key drivers at the top, at net interest income, we managed a growth of 3%. So when you look at the impact of the yield decline as a result of the new law specifically in Kenya, we had a decline of about 150 basis points on yields. But we also had a substantial growth of about 10% on the asset book. So from a price volume variance, as accountants would say, net, the actual market share growth managed to offset the decline on the yield. The other area that we've been focusing on since the last 2-3 years is managing our interest expense. So despite the fact that we grew our deposits to 500 billion, the actual expense that we paid out was 3% below the previous year.